Are you ready to leave the grind and make money for your family and yourself? If yes, you should read Robert Kiyosaki's book, The Wealthy Dad's CashFlow Quadrant. Kiyosaki reveals his tried and true methods for gaining financial independence and accumulating wealth in this best-selling book. The CashFlow Quadrant is a concept that he introduces. It depicts the various ways that people can earn money and provides advice on how to move from the left side of the quadrant, which represents employees and self-employed persons, to the right side, which represents investors and business owners. So what is CashFlow Quadrant according to Robert Kiyosaki? Kiyosaki's well-educated father advised him to aim for the employee or self-employed quadrants when he was younger. But his father, who lived in these quadrants, was never particularly wealthy. On the other side, Kiyosaki's closest buddy had a father who, despite having dropped out of high school, had achieved financial success and was in the business and investment quadrants. This wealthy dad was the one who gave the CashFlow Quadrant explanation. If you're not familiar with the Rich Dad Poor Dad finance book, check out our video about that in this channel for more details so you can grow with the flow. So if you're ready to take charge of your financial situation and realize your wealth building objectives, keep watching to discover more about Robert Kiyosaki's The Rich Dad's CashFlow Quadrant. The book breaks down into 4 quadrants: the E Quadrant, the S Quadrant, the B Quadrant, and the I Quadrant. So what is the E Quadrant? Quadrant E stands for employee. Those with jobs and paychecks are in the E Quadrant. You have a job and you exchange your time for money. They work hard their entire life to make that money. This is the real-world battle that the common individual can identify with, the struggle to save money for retirement so that they'll one day be self-sufficient. Based on your income, you pay the maximum amount of tax because the IRS believes that you don't make a significant contribution to the economy. Most people begin in this manner. The issue is that if you don't work, you don't get paid. The only possible exception is a paid 2-week vacation from your company. As an employee, you trade money for your time, effort, and knowledge. Now, what is the S Quadrant? Quadrant S stands for self-employed. Those who are self-employed or successful business owners belong in the S Quadrant. You're an employer. The danger zone is in this sector. You're entitled to identify yourself as a business owner if you work for yourself. You actually own your job, so to speak. In our world, even if you own a veterinarian clinic, it usually wouldn't function without you. Although you may earn more money than you did as an employee, the company is very dependent on you. You probably don't put in 40 hours a week. Even with nights and weekends off, you may easily work 60 or 80 hours each week. For the exercise to take place, you need to be present. There's little to no money made when you aren't. Being self-employed has a number of tax perks for starters. For instance, taxes are applied to your earnings after expenses have been deducted. In rare circumstances, you might be able to benefit from depreciation on the equipment you bought. Because your equipment purchase serves to boost the economy, you automatically earn a tax break over a number of years. You're nonetheless trading your time, energy, and knowledge for money. You work actively whether you're an employee or self-employed. This is what's referred to as active income. Work is done for pay. Of course, having a job or working for yourself is perfectly acceptable. Without these two groups of workers, the economy can't operate. It's not the intention to imply that everyone must fall into one of the next two categories. The key is to recognize the disparity in thinking. What is B Quadrant? Quadrant B stands for business owners. The business owner in the B Quadrant has a system in place and employees. According to Kiyosaki's definition, a business owner is someone who owns a company but is no longer required to operate that company. Your presence is no longer necessary because you now control a resource that brings in money for you. The firm would function normally even if you took a month-long vacation. Now, what is the I Quadrant? Quadrant I stands for investor. The various categories of investors who employ investment vehicles to give them financial stability are represented by the I Quadrant. He gives them relevant instances of how to make money with money through the velocity of money and teaches them the rules of money using a common sense method. Regardless of whether it's passive income or long-term residual income, your money is working for you. An investor doesn't trade time for money, much like a business owner. Depending on the type of investment you make, there may also be certain tax benefits. Capital gains or dividends may now be taxed in a lower tax bracket. Depreciation, a significant tax benefit, may occasionally be available to you as well. You can generate passive income whether you own a business or an investment. You're currently working with your money. This is obviously very different from being an active worker like an employee or self-employed person. Before we move on with this video, which quadrant do you want to be in? Leave us a comment down below. Also, don't forget to like, subscribe, and ring that notification bell for more financial knowledge. Here are some insights that can change your financial future based on Robert Kiyosaki's cash flow quadrant. Number 1. Someone can be labeled as an employee, self-employed person, business owner, or investor depending on how they make their money. Each of these 4 groups or quadrants has particular traits as well as strengths and limitations. Number 2. The employee or the E quadrant prioritizes security over all other considerations and looks for the stability of a long-term contractual commitment. To make money, this person operates within someone else's framework. Number 3. The S quadrant or self-employed person doesn't want their income to be dependent on others. They own their own business and are probably adamant perfectionists who value independence and knowledge. Number 4. The most dangerous quadrant is self-employment. 9 out of 10 of these businesses nationwide fail within the first 5 years, primarily as a result of a lack of resources and experience. Knowing when to leave a situation and move on to another one is crucial for success in the S quadrant. Number 5. Like Henry Ford, who surrounded himself with intelligent people who knew all the answers so he could focus on new ideas, the business owner or the B quadrant has a system where other people do the work. Number 6. The investor, often known as the I quadrant, uses the money to generate income. The I quadrant offers the possibility of true wealth. Number 7. Investors in the E and S quadrants of the stock market emphasize diversification. Diversification is a strategy to prevent financial loss rather than increase profits, as Warren Buffett suggests. Concentrating on a small number of investments is preferable to diversity. Number 8. Don't give your investment decisions to an expert. To paraphrase Warren Buffett, Wall Street is the only place where people ride in a Rolls-Royce to seek advice from folks who use the subway. Number 9. The safe side is on the right side of the quadrant. You won't have to be concerned about unemployment if you have a reliable method that generates income for you. Number 10. The key to success is the same as a Monopoly game's winning strategy. Purchase 4 greenhouses before trading up for a sizable red hotel. Number 11. Your mortgage is not an asset. It's a liability and an obligation that you need to pay off. Your home is still a liability even if you pay off your mortgage, since you have to maintain it and pay taxes on it. Property can only be considered an asset if it produces a positive cash flow. Number 12. Even gold is only an asset if you acquire it for less than you sell it for. Gold isn't always the ultimate asset. Number 13. Moving from quadrant E or S into quadrant B and then into quadrant I is the optimum route to financial freedom. A financially successful business owner will have the knowledge, resources, and time to assist the investor's ups and downs. Number 14. When you put forth a lot of effort to earn money that you subsequently spend, you don't get rich. Instead, you get worn out. Kiyosaki spent years living simply and exerting himself to amass wealth rather than pay his debts. Number 15. Huge deficit individuals purchase a stock at $20 and then sell it as the price increases out of fear of losing their gains. As the price drops to $5, they continue to hold on in hopes that it'll rise again. The investor doesn't care whether he wins or loses, and he only sells a stock when it's reached its high or when it begins to decline. Number 16. Write out your financial goals for the next year and the next 5 years to get started on the path to financial freedom. To display all of your income, expenses, assets, and obligations, create personal income and balance sheet statements. Number 17. Set aside $150 to $200 per month to pay off credit cards, followed by auto payments and mortgage payments, in order to pay off your consumer debt. After 5 to 7 years, the majority of people can be debt-free. Spend less on debt servicing and more on assets that yield revenue. Number 18. Become informed. Read the Wall Street Journal, listen to financial news, read financial websites, periodicals, and newsletters for at least 5 hours a week, or go to seminars on investing and money management. Number 19. Become an authority in a single category of issues. Bill Gates is a specialist who has addressed issues with software marketing. Warren Buffett is a specialist who has addressed issues in the stock market. Kiyosaki rose to prominence as a specialist in apartment housing issues. Number 20. Invest in assets that can generate passive or enduring residual income. Start off modest like the Monopoly greenhouses and work your way up to bigger stakes. So among these insights that we've mentioned, what do you think would help you change your financial future? Share your thoughts in the comments below. If you've received value from this video, please click that subscribe button, ring that notification bell, hit the like, and share this video with your money and business-minded friends. Till next time.